Hello traders, welcome back. In the previous two lectures, we have learned about how to detect an uptrend when it just started to form and then the method to trade long on that uptrend using swing trading strategy. Now in this lecture today, I will show you how to detect a downtrend from the very beginning of its formation and the method to trade this downtrend using swing trading strategy. As you already know that price falls in a downtrend market making continuous lower highs and lower lows. These lower highs and lower low levels or the swing points gives the best trading opportunity to a swing trader to trade the market. And as a swing trader, you should never trigger a long trade entry in a downtrend market unless you become a master in swing trading and have a good amount of knowledge on trade managing using multiple time frames. As a swing trader, you are only allowed to trade short in a downtrend market. So we will only look up for short trade entries on a downtrend market. I will tell you more in a later lecture about why we should avoid trade long in a downtrend market and why we should avoid to trade short in an uptrend market. Now, how to detect a downtrend momentum on the market when it just started to form? Because at the beginning of a trend formation, it is very confusing to predict its ultimate direction. Well, this is very easy, and if you have watched the previous two lectures, then you can guess how to do that. So the trick is, we need at least 2 lower highs and 2 lower lows to have a confirmation of a downtrend market. And the next question is, from which point we should start counting the lower highs and lower lows? It is very simple. Always remember that the highest peak point or top level from which price started to fall is our lower high 1. Then the first bottom level from the lower high 1 will be considered as lower low level 1. And then the second top level after the lower low level 1 is the lower high level 2. Now, to confirm a downtrend, we just need another lower low to form on the price action chart. And finally, if price continues to fall and make a new bottom below the previous bottom level, then this new bottom level is our lower low level 2. Now that we have 2 lower highs and 2 lower lows in a price action chart, that indicates that the downtrend has now begun. Although we have the confirmation of the downtrend momentum, but still we don't know for sure if the downtrend will continue for a long time. But if you have at least 2 back-to-back lower highs and lower lows in a price action chart, then that means you are watching a downtrend market. But remember one thing very carefully, that we can just predict the market momentum based on the previous market history. That means we can never be 100% sure of the next price movements. We can only just predict the direction of the market. So never raise your trade volume in a single trade no matter how strong the signal is. Always be disciplined to the proper money management system. Now that we have all the confirmation of the downtrend momentum on a price action chart, to trigger short trade entry, we just need a strong bearish candlestick pattern at the lower high level to indicate the final short trade signal. That is all we need to trade short in a downtrend market. So now we can start triggering short trade entries from the third lower high level to every next lower high levels the market will create on this downtrend market. That's the simplest and effective way to trade the short trades in a downtrend market. You will learn more things to validate a trade entry, but these are the main steps to trade the swings in a downtrend market. So I am signing off for today. In the next lecture, I will show you how to detect the downtrend momentum on a price action chart and hence trade short entries using swing trading strategy with real chart examples. So until then, have a nice day and goodbye.